Hello, testing and testing, testing. Can everyone hear me? What you should be able to see is the risk warning on the screen with the FX Pesa logo up the top left. You should be able to hear me as well. Hello, welcome. Just before I get things going, I just want to double check, can everyone see the screen okay and hear me okay? If you could just respond in the chat box, that'd be great in terms of the sound quality and also the visual. Just type through the chat box again. Excellent, perfect. That's the response I want to see. So I'll look to get going with the webinar now. My name is Dave Madden, and I work as a market analyst for Equity Capital in London. And Equity Capital is one of the many companies within the overall equity group. And of course, also included in the group is FX Pesa in Kenya. Now, before we actually want to kick off with this webinar, I just want to talk to you, just point out to you that anything that is covered in this webinar is purely my own thoughts, views, and opinions. It should not be taken as trading ideas or trading advice or anything like that. And just be aware here, as mentioned on the risk warning slides, trading in margin products carries a level of risk. So moving on with the actual update itself, we've seen some interesting moves in the markets recently. For those of you who haven't attended one of my webinars before, what I'll do is I'll run through a handful of the major popular markets, and I will then talk about what's going on and what's driving the markets in terms of fundamental analysis, news, and I'll also analyze the markets from a technical point of view as well. So what I'll be doing is I'll be going through a handful of popular markets. If there are any questions you have for me while we're kind of mid-flow, feel free to just basically say, I don't understand that. Please start. Would you please mind explaining that? But if there are any questions you have that are unrelated to the kind of the chart or the market I'm talking about, please please just type them in the chat box, and I will get around to it. The aim is I'll kind of cover a handful of the big markets, some of the big currency pairs, commodities, indices. I'll talk about the major themes of the markets right now, and then at the end I'll kind of throw it open to a case of answering any questions you have for me about any particular markets. So starting off with gold, we did see a fairly decent run on gold from latest July up until middle of August. What was going on with gold? Well, there was a kind of perception that the Federal Reserve might not be as hawkish as originally thought, and with that we saw relatively low government bond yields. For those of you who trade gold, it is worth your while keeping an eye on what goes on with the US 10-year yield. It used to be north of 3%. At one point it was quite close to 3.5%, but for the last few weeks, again, it's fallen back well below 3%. And then there's occasions here in the last few weeks where we've seen even below 2.9, 2.8%. So the relatively low yields on government bonds, particularly on the US 10-year government bond, has basically paved the way for an upward move in the helped the way for an upward move in the gold market. But what's happened more recently is we have seen a bit of a return to form in terms of the strength of the US dollar. Earlier today, Mary Daly, who is a member of the Federal Reserve, basically said that the war on inflation is not over. So we saw the Federal Reserve hike interest rates by 75 basis points in June and in July. There's talk they might do another 75 basis point hike in September next month. But there's been some softish economic indicators of the US recently. CPI, PPI, they're growing, but they're growing at a slower rate. A while back, we saw early this week, we saw a dreadful US Empire Manufacturing, US Empire State Manufacturing report, and also the Fed minutes from last night indicated that some policy members of the Fed feel that the US Central Bank should maybe look to do smaller interest rates at some point down the line. But today, Mary Daly, the Fed, said that it's kind of both the 50 basis point hike and a 75 basis point hike next month are both viable options. The war on inflation is not over. That led to a sharp upward move in the US dollar. As you can see here, we're now seeing a corresponding downward move in gold. For those of you that trade XAU USD gold being traded listed in US dollars, if you are ever going to trade gold, it's always worth your while keeping an eye on what's going on with the US dollar. There's a fairly strong inverse relationship between the two markets. Now, that relationship doesn't always hold up. It holds up some of the time, but not all of the time. And recently, whenever we've seen big moves in one way or another on the US dollar, that's typically impacted gold. So we can see here that we're moving sharply lower on the US dollar. Looking here at the RSI, rather the strength index, which kind of like an elastic band, if you will. Is the market kind of overstretched, or is it not? And if it's edging towards the lower band dotted lines, it would mean that we can overstretch to the downside. If it's approaching or it goes above these dotted lines here to the upside, the upper end of the range, it means it's kind of overstretched to the upside. So we can see here the RSI is moving lower, indicating the price bias into the downside. Looking at this at the MACD indicator here, we can see on this histogram here that the momentum is in negative territory, implying the bears are in control. So when you combine that all together, it seems as if the short-term bearish trend could continue. If you do fall further from here, where can we target? Well, looking down toward these levels here around 1736 and on towards 1719. So even though the shorter-term trend for gold is lower, it's worth noting the much longer-term trend for the metal is higher. So as I mentioned, the RSI is moving lower here. If it continues to fall from here and actually moves into oversold territory, that could act as an early kind of flash warning to suggest that the downward move in price has become overstretched. If we do see a snapback in price of gold from here, where can we target? Well, I've been looking up towards 1781, and a break beyond that, we can see is up towards 1792. Tying in with the theme of the US dollar, let's take a look at euro dollar. We can see here that that's moved sharply lower. Well, why is this? Well, a few minutes ago, I was just talking about why the US dollar has been strong. Mary Daly of the Federal Reserve issued a reasonably hawkish update, or hawkish enough update, only about 3.5 to 4 hours ago. And with that, there are concerns that the Federal Reserve might do another 75 basis point hike next month, and therefore we're seeing a fairly broad rally in the US dollar. And with that, we're seeing a sharp move to the downside in euro dollar. In fact, euro dollar has fallen to a level last seen about one month ago. So we're essentially at 1 month lows on euro dollar, which really kind of underlines how bearish the recent downward move has been. Looking at the MACD indicator here, we can see that momentum has swung from positive territory into negative territory, implying that the bears are now in control. The RSI is moving lower. In fact, it's actually moved into oversold territory. And while while euro dollar continues to hold below these three simple moving averages, it's likely the more medium-term bearish trend will continue. Further losses from here could see a target one spot at 0006, and a break below that could see a target at 0 spot 99.51. I mentioned here that RSI has actually moved into oversold territory. That could be almost like a flash warning. It's going to suggest that the downward move in price has become overstretched or overcooked. So if you were to see a snap back in euro dollar from here, where could we target? Well, I'm looking first and foremost towards these peaks along here, and a break beyond that could see us up toward one spot 0251, and then going beyond that up toward this area here around one spot 0324. One of the things you should be doing, when it comes to, for those of you who are interested in charting and technical analysis, essentially what it is one of the kind of boil that down. It's often studying previous price patterns to then use that as a predictor for what's going to happen. So I talked about how the RSI moved into oversold territory. The last time the RSI did move into oversold territory was down around here, and as you can see, on some occasions when the market remained in its downward trend, despite the fact that it was in oversold territory, there are other occasions where it moved into oversold territory, and then once again it moved out of oversold territory, but the price continued to go lower. So don't get a hard and fast rule to say that we've moved into oversold territory like we did here, but, although we did see a bit of a rebound. There's no guaranteed rule to say we've moved into oversold territory, therefore the market's just going to automatically flip around. I got a question here for CAD yen, which I will come on to in a bit. I'll just run through the other markets first and foremost. Sticking with the theme of the USA, the US 500 has been in a very strong bullish trend. To be honest with you, I've been kind of questioning the rallying myself. All I can really kind of think of is that a few charts ago, I was talking about how relatively low government bond yields. I was talking about how government bond yields are at relatively low levels compared to, say, a few weeks ago. They're well below the 3% mark. In occasions, we've seen the US 10-year yield, down around, down below 2.9, even down towards 2.8, or even below 2.8%. And if you ever trade the US, if you trade any of the US stock markets, it is worth your while keeping an eye on what's going on with bond yields. If the US 10-year yield breaks above 3%, that's when you could be looking into a potential area of a sell-off in equities. And if you see a fairly large move below 3%, that's when you could be kind of seeing a sign that equity markets are about to move higher. So it was only on Tuesday that we actually saw the US 500 hit its highest level in about 3.5 months. So the kind of the broader trend for the US 500 is very much to the upside. We've seen a bit of weakness come into the markets in the past 24 hours. Although there were dovish pockets to the Fed update last night, the Fed minutes, overall the view is still that the Federal Reserve are going to be hiking rates next month. Mary Daly's comments today suggest it could go either way. It could be a 50 basis point hike, or it could be a 75 basis point hike. And then with that, we're seeing a bit of pressure being applied to the US 500. But keep in mind, we did recently hit a 3.5 month high, so a bit of a pullback is hardly a surprise. Even though we've pulled back a small bit and we're essentially dancing around the 20-period moving average here, we're holding comfortably above these two simple moving averages here, 50-period moving average and the 100-period moving average. So while we continue to hold above these two moving averages, it's likely the more medium-term upward trend will continue. A rally from here could see a target of 43.11, and a break beyond that could see a target of 43.25. Looking at the more near-term price action, we can see in the past 24 hours or so, 36 hours, we have been moving lower. The RSI has been moving lower as well, indicating the price bias is to the downside and momentum is in negative territory, although we have seen a decline in negative momentum, so perhaps the bears aren't as influential as they once were. So if we do see a continuation of the short-term downward move in the US 500, support could be found at 42.00, and a break below that could see us back down toward 41.28. Sticking with the theme of stock markets, we've seen a decent rally in the UK 100 as well, the FTSE 100. And if you look at the price action here on the UK 100, we can see it's been in a fairly strong upward trend. It recently set a peak, which I know is a 2-month high. We've had a bit of a pullback, and we appear to be edging higher once again. The price pattern here you see on the UK 100 is not too dissimilar to the price action that we saw here on the US 500. And I'm bringing this up because this is one of the elements of Dow theory, named after Charles Dow, the stock market technician from the 1920s. He had a theory, and one of the tenets of his theory was that the averages must confirm each other. And what that essentially means is markets that are quite similar should, in theory, be moving in the same direction by the same amount at the same time. So if you're trading the S&P 500 and you observe that it's in an upward trend, and you're thinking to yourself, you're going to buy the dip, take a look at what's going on with other stock markets. The FTSE 100 in the UK, the DAX in Germany, the Nikkei 225 in Japan. If they're also pointing higher as well, then you can be more confident that the broader upward trend in global stock markets will continue. And then conversely, if you observe that there's a downward trend in play, and you want to short the market, and you're looking at kind of selling the rallies, keep an eye on what's going on with other stock markets. If they typically move in unison, not always, but they typically do. So we saw a 2-month high on the UK 100 only yesterday, the day before, which really kind of speaks to how bullish the recent upward move has been. We've seen a bit of a pullback, but already we appear to be kind of edging higher again. While we continue to hold above these 3 simple moving averages, it's like a more medium-term upward trend will continue. A further rally from here could see a target 75.70, and a break beyond that could see a target 76.35. Looking at the price action here, we saw on the RSI it moved sharply lower. It appears to be moving higher again. It does appear to be kind of turning higher, which would speak to this kind of upward move in price. Looking at the MACD indicator, momentum's in negative territory, but it is in decline. So once again, suggesting the sellers are in control, but they're not as influential as they once were. You know, if the UK 100 fails to retest or break above this recent peak here, that could be an early warning sign that the short-term downward trend is still in effect. If we move lower from here, we can actually retest this area here around 74.63, and a break below that could see us back down towards 74.17. Coming now onto oil. US oil has seen a fair bit of volatility recently. Only yesterday, US oil WTI fell to its lowest level in about 6 months. I think it was early February. It fell to the level last seen in February. So given the kind of broad sell-off we've seen in US oil, what's going on? Well, there's essentially concerns about the health of the global economy. The United States is in a technical recession. According to the Bank of England, the United Kingdom is on track for a recession. There are recession fears, or at the very least, slowing growth fears hanging over the Eurozone. China, the second largest economy in the world, you know, their economy is cooling. Only during the week, Goldman Sachs cut its 2022 growth forecast from 3.3% to 3%. So a decent enough trim of their forecast. And also the most recent economic indicators from China: retail sales, fixed asset investment, industrial production. They were all worse than expected, and they all showed declines in the month. So there are concerns over the health of the global economy. And you would say that oil kind of falls into the category of being a risk-on asset. So when people are optimistic about the health are optimistic about the future, they tend to buy assets like gold or industrial metals such as copper, because if you're in industry, you require more energy, you require more minerals to kind of fuel the factories and in turn keep the economy going. If you fear that we're going to go downhill economically, and therefore there'll be fewer transactions going on, and manufacturing plants won't be as busy as they were, say, 6 months ago or a year ago, then you typically see a downward move in raw materials, be it oil and be it metal. So the kind of overarching trend for US oil WTI into the downside. It hit a 6-month low only a few days ago, although we have seen a fairly decent rebound since. Looking at the kind of big picture negative trend, you know, we can see a classic example of a series of kind of higher highs and higher lows. You know, a downward trend is defined as a series of higher highs and higher lows, higher high, higher low, higher high, higher low, although the high that we saw here certainly cleared this peak here, but it did not clear this peak. You know, it moved lower as a rally. This peak here didn't clear this peak, giving you a bit of a warning sign that the bearish trend is still in effect. Moved lower once again. This has played out over several weeks now, so we've seen a series of higher highs and higher lows. Ultimately, I think, you know, while we continue to hold about this below this peak here at 94.29, it's likely the more medium-term bearish trend will continue, or even, you know, even we hold below this area here at 92.16. So the more kind of bearish trend is still in effect. If you do move lower from here, you'll be looking out towards to this area here, the recent, you know, the recent lows, the multi-month low of 85.37, and a break below that could see us down towards 84. And then if we have a decent break below 84, the next big kind of psychological number to watch out for will be 80. On the reverse though, you know, even though I talked about we've had a long-term downward trend, it's worth noting we have been bouts of buying, and there have been kind of periods where we've seen a very sharp upward move, such as here, to an extent here. Here we saw some decent rallies. We saw a very decent, very impressive rally here. We saw a decent rally here as well. So the question that traders are asking, this rally that we're seeing here, is this just a rally before the bullish run fizzles out and the market turns lower again? Or is it a case of the market's actually going to keep on rallying from here and keep going and going? What's also hanging over, or has been fueling the recent upward move in oil in the last couple of sessions, is that there's still ongoing supply issues. You know, the output levels achieved by OPEC Plus aren't as much as they could have. You know, you know, there are countries such as Saudi Arabia that could, if they wanted to, ramp up output, but output is fairly squeezed. Obviously, Russia continues to be an issue in terms of squeezed output. So supply constraints are still kind of propping up oil from time to time. So look at the price action here. It's been a fairly aggressive move higher. We've cleared these two simple moving averages. We've broken above this peak here, so things are looking on the positive side. The RSI is moving aggressively, moving sharply higher, indicating the price bias is to the upside. And looking at the MACD indicator, we can see momentum is firmly in negative territory, implying that the bulls are in control. If we do see a continuation of the short-term upward move in US oil, where can we target? Well, I'm looking up towards 92.16, and right beyond that, could see up towards 94.29. And then, of course, if we clear 94.29, we can then be looking up toward this peak here, or in the direction of 95. I had someone asking me about dollar CAD. Any questions so far on what I've covered? Any comments? Any questions? I know someone was asking about CAD yen, which I'll come on to now in a second. CAD yen. So like many currency pairs, many yen crosses, we saw a major rally in the be it say sterling yen or dollar yen, or in this case CAD yen, both in May and through July. There's a major bout of selling weakness in the Japanese yen. With that, we saw a major we saw the yen lose ground on a big scale against Canadian dollar, the British pound, the Australian dollar, the US dollar. So we kind of the very big picture view for CAD yen is to the upside. You know, it's worth noting the peak that we saw here, the most recent peak, managed to clear this peak here. So that says a lot. We've had a fairly sharp move in the downside, and it is worth pointing out though that the losses that we saw here actually dropped below these losses. So it's interesting to see that we've had a fairly large move in the downside. We did take out this big level here, but the market did manage to rebound once again. So indicating the shorter, you know, it seems as if the more medium-term, short-term trend is to the upside. In fact, if you look at the levels that we're seeing here, we're currently kind of hanging around this is zone here around just shy of 105, in around 104 spot 90 thereabouts. So this would be an important level to watch out for. If you follow it around, you can see, I'll actually just put this line in now. I deliberately put through this line in here. You know, we can see CAD yen encounter resistance thereabouts to consolidation around the kind of 105 mark. It's sort of acted as support here. It's sort of acted as a resistance point here. So, you know, the kind of concerns are that area is going to go once again act as a resistance zone. If we do have a fairly decent break beyond this area, the kind of 105 area, we can then be looking up to targeting first and foremost this zone here around 105 spot 90, and a break beyond that could see up toward this peak here around 106 spot 63, and then go beyond that again up towards, you know, the highs of July, north of 107.50. On the downside though, you know, there's every possibility the market won't overcome this hurdle here at 105 and the market will turn lower. Do move lower from here. I'm looking back down towards this zone here in around 103 spot 26, and a break below that could see us back down toward this area here around 102 spot 58. If you break below this zone here, that could see us all the way back down to the August lows of 101 spot 40. I got a question here for pound dollar, which I'm happy to take a look at. For the person you asked about CAD yen, I hope that answers your question. Pound dollar. So I'll quickly zip back over to euro dollar. Look at the price action of euro dollar. It bottomed out in mid-July. Had a fairly decent rebound. It's sort of traded within a range. It got to a peak here in, you know, around the 10th, 11th of August, and then it's been moving aggressively lower. Let's take a look at the price action of pound dollar, keeping in mind Dow theory. Markets that are similar should, in theory, move in the same direction at the same time by a similar amount. What's going on with pound dollar? Not too dissimilar. It bottomed out in July. Then we had a fairly impressive rebound all along here. Market had a decent enough pullback. I tried to unsuccessfully reclaim this peak here, which it didn't, and then the market actually kind of rolled over on itself. And then more recently, in the past few hours, we've seen an aggressive move to the downside. I talked a few minutes ago about how euro dollar fell to was fallen to a 1 month low. It's a similar situation with pound dollar, not quite there, but we're at about a three week low or so on pound dollar. So euro dollar is moving lower, pound dollar is moving lower. The kind of common theme here is the dollar is strong and the dollar is driving down the British pound and also the euro. So once again, if you know, even if you like to trade cable only, pound dollar only, it is worth your while keeping an eye on what's going on with euro dollar and vice versa. You know, if I was ever, you know, deploying or developing a strategy, and if it's on the currency markets, I would always be looking at, if you're thinking of, for example, buying or selling pound dollar, whichever way around it is, I'll be looking at what other sterling crosses are doing and what other dollar crosses are doing. It is very much worth your while seeing what's at play. So pound dollar is fallen to about a 3 week low or so, which kind of says a lot about how bearish the recent downward trend has been. There's a clear rise in negative momentum, so the bears are in control. RSI's moved lower. In fact, it's actually moved into oversold territory. While we continue to hold below these 3 simple moving averages, it's likely the short-term downward trend will continue. Move lower from here, could see it retest 1 spot 1889. And a break below that could see it down towards 1 spot 1759. Looking at the other side of the coin, we've had a sharp move lower. We've fallen to a multi-week low. The RSI has moved into oversold territory, so that could act as a flash warning that the downward move in price has become overstretched. If we do see a snap back in pound dollar from here, where can we target? Well, first and foremost, I'll be looking up towards this peak here. And at 1 spot 2142. One spot 2142, and a break beyond that could see us up toward this zone here at 1 spot 2215. And then of course if we clear that, I'll then be looking toward these peaks along here. Any other markets you want me to take a look at, or is there any kind of questions you have for me, or for those who asked, the individual who asked about pound dollar, happy with the answer I gave, or anything else you want me to clarify on? If there are no more questions or comments, I'll happily look to wrap things up. So this is kind of a last chance saloon, as it were. If you have any questions for me, any markets you want me to take a look at, I'll look to wrap things up. Otherwise, I'll look to bring the webinar to a close. I'm conscious it's just gone past the half an hour mark here. I got a comment here. The EA. What? Do you want to just clarify that, please? I'll just respond there saying EA question mark. Oh, sure. Euro, Aussie, and Aussie yen. Sure, I think I got those currency pairs. So Euro, Aussie. So first things first, I'll actually look at them in another way around. I'll first of all look at AUD JPY. And why is this? Because we recently spoke about CAD yen, and a kind of common theme of CAD yen is that the really big picture for CAD yen is higher. It came in aggressive selling pressure in early August, but since then it's been moving higher. And if you look here, the price action of CAD yen, it's certainly rebounding. Will the rebound last, or will it turn lower? We're coming up to a very crucial resistance zone for CAD yen. I'm now going to take a look at Aussie yen to see if the price action on Aussie yen is fairly similar to that of CAD yen. And it is very similar, not identical, but broadly speaking, it's the same. The really big picture trend for Aussie yen is to the upside. We saw I think it was actually a multi-year high that was set here in the 10th of June. Although we've been sort of trading almost range bound for several weeks, but the kind of much bigger picture upward trend is still in effect. Taking a look now at the more recent price action. A minute ago, I said how CAD yen had an aggressive sell-off in early August, and it was turning around. And it's turning around fairly sharply. We're seeing a similar situation with AUD JPY. So AUD JPY is driving higher here, although it's come off the boil in the last couple of sessions. But notice how the lows that we set here are comfortably above the lows that were set here, which are comfortably above the lows that were set here, and so on. So the lows are higher. We're not always seeing a series of higher highs, but we're certainly seeing a series of higher lows. So I think the kind of bias is the upside for Aussie yen. If you can hold above this zone here around the kind of 93 area, I suspect the more medium term upward trend will continue. A rally from here could see a target at 90, just shy of 95, 94, spot 98. And then if you break beyond that, we can then be looking up towards these peaks here. And the one to watch out for, of course, will be the kind of this last big peak here at 95, spot 74. To the downside, though, if you manage to kind of break below 93, I'll then be looking down toward this zone here in around 92, spot 23, and a break below that could see us back the way all the way down towards the lows of early August in around kind of 90, spot 50. Coming now to Euro Aussie. the big picture trend for Euro Aussie is weaker. We saw an aggressive move to the downside here into April. The market rebounded, which lasted for quite a few months for about June, about 2 months, only to move lower yet again. So the downward trend seems to be back in play for Euro Aussie, although we have rebounded somewhat, but the big picture view is still to the downside for Euro Aussie. So if you continue to hold above, we've fallen below these two simple moving averages. If you continue to hold above, let's say this is zone here around one spot, one spot 48, or one spot kind of 49. If you continue to hold below, say, one spot 48, it's likely the more medium-term bearish trend will continue. If you look at the more short-term price action, we've moved aggressively lower once again. We drop back below these two simple moving averages. We can see a fairly clear decline in positive momentum. So the bulls are certainly running out of steam. The RSI is moving lower. The short-term trend is the downside. The much longer-term trend is the downside. Continue to fall further from here. We could look at target this zone here around 1.4432, and a break below that could see us back down toward the lows here in around 1.4384. On the flip side, if we do manage to break above the kind of 47.73, or break above this area here at 1.4048, that will be the kind of beginning. That'll be the beginning of me beginning to think, okay, we are going to turn around, and then the next big levels to watch off for will be these peaks along here in around just north of 149, kind of around 149, one spot 49, 10, one spot 4920, and then of course 150 will be the next big level to watch out for beyond that. I'll look to wrap things up now in a second. I got a question here about GBP USD. I'll answer that, and then I'll look to wrap things up because I've been conscious that I've been going on now for about 35 minutes. The question is, will the current market price of GBP break support at 119.90? Well, we're not too far away from the moment. We're at 119.32, so we're only about 13 14 pips away from that price. As I mentioned, we've seen an aggressive move lower. Euro dollar is at a 1 month low. Pound dollar is at a 3 week low, 3.5 week low. Momentum is in negative territory. A move to the downside in the RSI. On the 4-hour chart that I'm looking at here, the three moving averages, 20 period, the 50 period, and the 100 period. The currency pair is holding below all three of those. So when you combine all of that, multi-week low, below the simple moving averages, MACD indicator of the RSI, it paints a bearish picture. Whether it breaks below it or not, it remains to be seen. But given what I've seen here, I would say in the near term, it's likely this short-term bearish trend will continue. As I mentioned, if you do kind of take out that level you're talking about, we can then be heading down towards 1.1889, and the big one to watch out for, of course, will be the lows of July, 1.1759. On the flip side, though, it's always possible, the currency pair could have a large correction, stabilize around the kind of 119 area, and then look to move higher again. So if you could manage to hold above this zone here at 118.89, that could be the kind of indication to say, although we've had an aggressive move lower, we didn't actually create that that new kind of 4 week low, 5 week low, and that would have been created had we dropped below it. So if you hold above 118.89, there is a kind of possibility the broader upward trend will continue. Should that be the case, I'm looking toward this peak here. Well, first and foremost, I'm looking towards 120, and then beyond that up towards 121.42, and beyond that again up towards 122.15. Now, I'll look to wrap things up there. I do want to thank everyone for everyone who joined the webinar, and especially for those who asked a few questions. It's always nice to get asked a few kind of random questions, especially on currency pairs or markets. I don't really look at a huge amount, so that's always very enjoyable. So I'll look to sign off now and say my goodbyes. Thank you very much. You're very welcome. You're very welcome. Thank you for the kind words. And for those of you who regularly tune in, I'll be back here again at same time next Thursday. Everyone, have a good evening. Thank you very much.